Hello guys, welcome to Bhavna's Online Academy. So hope you would have seen the first part of SQC1 and here we are moving on with the second part. So we had already learned the first two elements, which is leadership responsibilities and ethical requirements. Let's now move on to learning the third one, which is the acceptance and continuance of client relationships. Here in this element, they'll tell you if you are continuing with an existing client, if you already have a client and if you want to continue with them, or in case if you want to accept a new client, what are the factors that you have to see before continuing with a particular client or before accepting a new client is what they're going to tell you. First, they are telling you that whenever you're taking up a new client, or whenever you want to make the decision of whether to continue with the client or not, you need to see the integrity of the client. You must need to know if the client what you are doing is honest enough or not, the financial statements they have made is good enough or not. And how are you going to evaluate whether the client is a good client or not? Here you have to see what is the business reputation of the client, what are the client's business practices. So someone like a Tata, now if you see the Tata, Mr. Ratan Tata is known for his integrity. He is known for his business practical practices. He is known for his ethics. So you must see whether how the principal owners, the key management, the related parties, the those charged with governance, all form part of the company only. The principal owners, key management, related parties, and those charged with governance. So you should see whether how are their business practices, what is their business reputation, and you must see whether if there is any accounting standards which is given, whether they are following them or not, how is their internal control environment, whether they are maintaining good controls in the company or not, in case if any mishap happens, what is their control system, and whether you must see whether the client is aggressively concerned with maintaining firm's fees as low as possible. So here they are telling you that you must also see, now in the Hindenburg report where we saw the firm's fees, that means the Adani group would have paid very minimal amount only to those tiny auditors. They wouldn't be paying in lakhs and crores to those small auditors. So here they were aggressively, the Adani group was aggressively concerned with maintaining the firm's fees as low as possible. That means if they're trying to keep their auditor's fee as low as possible, that means that quality will not be there. So they might want to hide something, or they might not want to bring out all the facts, or something might be there, right? So that also you have to check. Then you have to see if they will put any limitation in your scope of work, or will they allow you to work with as much freedom as the auditor should be given, whether the client is involved in any money laundering activities or criminal activities, whether if you are getting a new engagement, why did they leave the old auditor and come to you? You have to check that why is the previous firm not appointed and why are you appointed. You must check all of this before accepting a client. You must evaluate all these factors. Yes, so now all these factors, whose help can you take in evaluating this information about the integrity of the client? From whom can you obtain this information? So first person you can obtain this information from is the old auditors, from the old auditors or the old people who are providing the services before you. So the professional accountancy services, the previous providers of that services, you can go and ask them. Yes, the second one is you can make an inquiry of other firm personnel. So other members in the firm, if they know anything about this client, you can get information from them, or from any third party, suppose investigative reports or anything like that. If there is any third party sources from where you can obtain information, you can do that. And you can also personally do some background searches based on some database which is available to you. Yes, so these are the three ways by which you can obtain information about the integrity of the client. Yes, okay. So now also what you need is, this was from client perspective, that means from your perspective what you need to see about the client. So now what we should see about a firm before taking up a new engagement, we are going to understand. So the engagement partner who is there, first from the client side, what he has to check we have understood. Now what he has to check related to his audit firm, we are going to understand now. Yes, so we are going to understand that now. So matters to be considered in determining if the firm, so is the audit firm capable enough, is the audit firm competent enough, whether it has the time, the resources to take a new engagement. You have to evaluate. The client might be good, but do you have that amount of capacity to do that audit of that client, you have to also check. So you need to check whether the personnel, the people in the firm, the engagement team, whether they have the knowledge of that particular industry, whether they have an experience with what regulations and reporting requirements are there, whether you have sufficient people in your firm. 11 people firm cannot audit a $100 billion company, so you must have sufficient personnel. Whether you have experts in case you want any help, whether there is an EQC or someone who is going to quality control your audits, and whether will you be able to complete that engagement within the reporting deadline also, you have to check. Yes, so all these factors you have to check, whether they are having knowledge, whether they have experience, whether they are sufficient, whether they have experts, whether they have EQC are available, whether they'll be able to complete it on time. You have to also check that. Yes, the engagement partner has to also check that, yes, before undertaking a new engagement. Yes, so now you have seen about the client, you have seen about the audit firm also. The final part what they tell you here was, in case something happens, now you have you have taken up the engagement, but something so happens that you are pushed towards withdrawal from the engagement, that you need to, now you cannot do such engagement. Yes, so if something like that happens, then you need to first discuss with the client. The audit firm first needs to discuss with the client whether what are the reasons for such withdrawal, why it is withdrawing. Yes, so once it has discussed the reasons, the client should see if he can do anything about it. If he or she cannot do anything about it, and if it is only appropriate that now the audit firm can only withdraw, in such case it can withdraw, and it has to state the reasons to the client. Yes, so and then you cannot just you cannot just take up an audit, and whenever you want, you cannot just withdraw from the audit. You will have, the audit firm will have some professional, regulatory and legal requirements that it has to comply with. First check if the regulatory authorities is allowing you to withdraw from that client. If it is allowing you, then well and good, you can just tell them that you're withdrawing and then withdraw. Yes, check your legal requirements also before withdrawing. And then finally, when you are withdrawing, document what were the issues because of which you are withdrawing. You would have taken some consultations and you would have arrived on some conclusions based on whatever discussions you would have had. So write the basis for such conclusions also. Yes, so this is what you have to do when you are withdrawing from an engagement. Discuss with the client, discuss with the legal regulatory authorities, and see the legal requirements. If you are able to withdraw, then you can withdraw. Just state the reasons and you can withdraw. Yes, okay. So now we have understood the third element also. So now we have understood the third element also. Now moving on to our fourth element, which is about the human resources. So now human resources. Okay. So here what they tell you is that you must establish policies and procedures to provide reasonable assurance that the firm has sufficient personnel with competencies, capabilities, and commitments. You need to see why are the big fours preferred so much, because the kind of people they take into their company. Usually you would have seen all India rankers would prefer going into the big four only, and big four people would also prefer them only because they understand that they are capable enough, that they are competent enough, and they are having good amount of commitments. That way they have got an all India rank today. Correct. So you must see. Okay, so you must make sure that the people that you have in the firm are competent, capable, and they are also having the commitment towards work. Okay, so the firm must also, what it should do is to maintain quality in the firm. They must make the personnel who is there in the firm aware of what the firm's expectation is. Only if I know what the firm is expecting from me as a audit member, I will also be able to deliver to them. So they must make us understand that whatever promotions they are going to have in the firm will depend on what kind of quality I am providing, what kind of performance I am providing. And what the engagement partner can also do is that they can also give some performance evaluation and performance counseling, progress counseling, career development opportunities, because of which the people working in the firm will also be motivated enough to keep on delivering quality. And then in case if there is any failure to comply with any quality standards, then it must result in disciplinary action, so that people are fearful. In case if something goes wrong, then they'll be punished for it. Yes, okay. So whenever engagement partner is there, and whenever he takes up an engagement means nothing but your audit. If an engagement partner takes up an particular audit, and a engagement team is being appointed to do that audit, then it is the responsibility of such engagement partner to keep on supervising this engagement team. Either the engagement partner can supervise it, or any senior member of the engagement team will supervise the junior member of the engagement team. Okay, engagement team is nothing but the team that has gone to do the audit, okay, from the audit firm. So you must check How so here now to determine how much supervision do you do. So now to determine how much supervision needs to be done to this engagement team, that on a scale of 1 to 10, what amount of supervision does this engagement team needs to be given. So you have to check whether how much the practical experience this engagement team is having, what is the professional standards and regulatory standards and legal requirements understanding the engagement team has. Does the engagement team has technical knowledge of the industry of which the client is operating, and what is the kind of IT environment the client is having, and what is the ability of the engagement team to apply professional judgment. So if it is a completely full junior team, then a lot of then on a scale of 1 to 10, 10 should be the level of supervision, highest level of supervision should be given. If it is a completely senior team, then they might be more experienced enough, so that amount of supervision might not be needed. Yes, so depending on that, you have to decide your level of supervision given below factors, depending on those below factors. Yes. Okay, so now we have understood our fourth element also, which is our human resources. Moving on to the fifth and sixth, which is engagement, performance, and monitoring. Yes, so let's first talk about engagement performance. So, see, like I told you, the more experienced people in an audit will review the work of less experienced people in the audit. The seniors will review the juniors, in simple words. Yes, so there are three parts: one is review, one is supervision, and then one is consultation. So what does review mean? Review means that if somebody else has done the work, you are going to review that work. You are going to just review whether the work has been done properly or not. So you have to check whether the work is done in accordance with the professional standards, regulatory and legal requirements, whether were there any significant matters when they were dealing with an audit. Was there any significant matter that was raised? If such significant matter was raised, then was consultation taken place for that? Suppose a junior article, he had some doubt in some place, he had some doubt in some areas, and he was not able to understand how to proceed with that. So in case of such significant matters or issues, so where someone there to consult him and guide him through, you have to just check that review. Okay, and you also need to check what results have come out of that. Then you have to also check if there is any need to revise the nature, timing, and extent of work performed. So you have to check whether the amount of time you have given to a particular audit, the amount or extent of work you have done for a particular audit, is it enough, or is there any risk in the audit? If there is any risk in the audit, then you need to increase your nature, time, and extent. You need to give more time, you need to cover more, you need to extend as much as time as possible, and cover more area so that the risk gets reduced. Yes. And then finally, the work performed supports conclusions reached. So if you have reached a particular conclusion, okay, suppose now I have told that a plus b equal to c. If I've come to that conclusion, you need to check whether this work has been performed properly or not to come to this conclusion, or just like that you're giving a conclusion. So you need to see whether the work has been performed to support that conclusion or not, and whether sufficient and appropriate audit evidence has been obtained or not. Yes. So engage. So when you're reviewing, you have to review all these factors. Next is supervision. So in supervision, what you will do is that you will track the progress of the engagement, whether everything is happening on a timely basis or not. If the engagement has to be completed within 100 days, whether the timeline is being followed or not. Okay, work progress you have to check. And you have to check if the engagement team what you have appointed has sufficient time to carry out the work or not. If there is a work which would require 10 people to complete a work in 10 days, if you had only appointed 2 people in that place, then that is not sufficient. So you must also supervise whether the engagement team has sufficient time to carry on the work or not. Okay, so in case if there is any significant issues, then you have to modify what your plan. So earlier you would have planned, that this area will do like this and this. Now if there is any issue arising, then modify your plan also accordingly. Okay, then identifying matters for consultation by more experienced team members. So if there is any junior team member, then he or she, if there is any matter that has to be consulted by more experienced team member, then make sure that it is being consulted also. Yes. So these are the things what you have to supervise. And finally, when you talk of consultation, so consultations, you must also have policies and procedures in your firm, so that appropriate consultation takes place on difficult matters. So usually if you see in big four, there will be a consultation team, there will be a consultation group, big four top 10 also, where in case if there is any difficulty in a particular audit matter, you can raise that doubt to that consultation team and they will clear your doubts. In case if there is any legal doubt you have, if there is any regulatory doubt you have, if there is any particular industry related doubt, then you can raise the doubt to them and they will clear the doubt for you. Okay, so sufficient resources where they're available to enable consultation, where they're first consultants available to consult and resolve your doubt. And finally, nature, scope and conclusions should be documented. So whatever you had asked to them, the nature, the scope and whatever conclusion they had given to you, that also you have to document, like so and so consultation was got. Okay, so this was about your engagement performance. In engagement performance, there is one more part. Once you have understood what is reviewing, supervision and consultation, there is one more part which is about the EQCR, because an engagement's performance is also quality check is done by an EQCR only. Okay, so here what they are saying is, for audits of financial statements of listed company, for other companies or entities, whether you do or not, whether you do this external quality control, I mean engagement quality control or not, you need to definitely do it for the listed entities. So for the listed entities financial statements, an engagement partner must appoint an EQCR, number one. Once the EQCR is being appointed, during if there is any, during the audit itself, if there is any significant matters, then you can discuss that with the EQCR. Okay, and check what he or she has to say about it. And before the audit report is issued also, once the EQCR will review everything. So three stages. One, appoint the EQCR. In during the audit, if there is any significant matter, you can discuss with the EQCR. After the audit is done, before issuing the audit report, you can go and get it reviewed from the EQCR once. So that is for the financial statements of listed entities. Okay, the EQCR, okay, this is from the engagement partner perspective, what he has to do. Now what EQCR has to do, just a minute. Yes. So now what an EQCR has to do is given here. So EQCR has to consider the following when he is going to review. What are the factors he has to consider? Is first he should see whether the engagement team which was appointed to do that audit, whether they were all independent or not. Okay, second thing is that if there was any risk identified in a particular audit, what was the response to that risk? Okay, if suppose we understood that in a particular client the area of cash and bank is very risky, some fraud might happen there. If you have found out such risk in a client, how was this risk addressed when they were doing a audit? That response to such risk he has to understand. If there might be a few judgments that the audit team might have made, that judgments have to be taken into consideration. And in case if there were any uncorrected misstatements, that means if there were some misstatements, whether they are corrected or not, corrected and uncorrected, both should be identified and that significance has to be evaluated, whether it will make an impact or not. Okay, and then what are the matters that were communicated to the management and TCWG while an audit was happening? So if there is any problem or any matter or any issue was there, or any discussion was made with the management and TCWG, what was the discussion made and what was the conclusion reached? Such matters have to also be understood by the EQCR. Then whether the working papers means that whenever you are collecting some audit evidence, what you will do is you will go and document such audit evidence. You will go and document such audit evidence. Now when I was doing this cash and bank area, I got a bank confirmation. I got a confirmation from bank that this company has 10,000 rupees, 10,000 rupees in their bank account. So now if such audit evidence I've got, okay, such bank confirmation I've got, then I will go and document, then I'll go back and document it in my Excel sheet. So such Excel sheet where my audit evidence is being documented is what is known as your working paper. So working paper is nothing but the Excel sheet in which your audit evidence is being documented. It is known as your working paper. So the EQCR should check whether this working paper is reflecting the work performed or not. If you have got a bank confirmation, if you have said such work has been performed, whether that working paper is containing that work performed or not. And finally, whether the report which is issued, whether it is appropriate or not. So all these things you have to see, like independence, what is the risk and what was the response, what is the working paper, what are the communications that has happened, whether the report is appropriate or not. All these factors EQCR has to see. Yes. So here then what they are saying is the EQCR's objectivity should be maintained. That means That means what they are saying is the EQCR which has been appointed should be bias free. He should not be biased. He should be bias free. Then only a good quality check will happen. Yes. So to maintain such objectivity of the EQCR, the firm's policies and procedures should be designed accordingly. So suppose for example, what are the firm's policies and procedures that could be designed is that he or she should not be selected by the engagement partner itself. If suppose now I am the engagement partner, okay, and I have done the audit of Reliance, and okay, now if I am myself given the option to choose an EQCR among 3 to 4 people, I'll choose who is my friend, who is my friend, I'll choose them, so that they help me in not bringing out mistakes from the audit, or else my name will get affected, my reputation will get affected. So here this thing can happen. So because of that, they'll say that engagement partner himself should not select the EQCR. Okay. uh, does not participate in engagement during period of review. So here what they are saying is the EQCR should not participate when the review of an audit is happening. If the engagement partner is suppose reviewing an audit, before EQCR itself, one round of review will happen, by the senior head of the audit itself. So in that review, this EQCR should not be there. The EQCR should not make decisions for the engagement team. He should be independent, and then so it should not subject to other consideration that would threaten reviewers objectivity. So anything that can make the EQCR biased, that things should not happen, in simple terms. Okay, understood. Yes. And the final topic that we come here to is the monitoring. So in monitoring, what they are telling is that you need to monitor, a person needs to monitor whether everything is happening properly or not. The same thing again they'll tell: professional standards, regulatory requirements, legal and requirements, all things should be complied. Everything should be adhered to. Okay, the quality system which is there should be properly designed and effectively implemented. Just if you design a quality system and you tell this should take place, you should also make sure that everything is taking place also. Yes, so that monitoring should be there. Someone should monitor whether all the policies and procedures are being implemented or not. Okay. And you should also make sure that the reports are appropriate, the reports which are issued are appropriate, and it is correct, it is obliging towards the quality control policies also. Yes. After that, here they are telling you that ordinarily a review monitoring should be performed in a cyclical basis. Okay, so every cycle the people who has experience and authority should do this monitoring process, whether all the engagements happening in an audit firm are happening properly according to quality or not, so that quality check should happen. So what they are saying is this inspection which is there, this should at least happen once in 3 years. This should at least happen once in 3 years. Okay, if an engagement partner is there, he might have several audits under him. So you must pick one audit out of those several audits, and you must do a monitoring for that you must do a quality check for one of the audit engagements of one engagement partner. Okay, for one engagement partner, at least one audit engagement should be monitored and quality check should be done, and this process should be done once in 3 years. This process should be done once in 3 years. Okay, understood. Now moving on, the last leg, it is about the complaints and allegations. So what happens if there is any mismatch between what is written in your quality control policies and procedures and what is happening in the firm? If the firm is failing to comply with the professional standards and legal requirement, if the firm is not complying with the firm's quality control, if any engagement team or if the engagement partner or if a particular team working in a particular audit is not following all of this, if there is non-compliance, then a complaint should be raised. The complaint can either be raised by people from within the firm or people from outside the firm. Within the firm itself, the other audit members can tell that this particular audit team has not done the engagement properly, or a particular partner can tell, the partner who was not the audit partner, a partner apart from there. So in a firm, in an audit firm, there is not only one engagement partner. Okay, so there'll be multiple engagement partners. So one engagement partner can raise a quality issue about the other engagement partner. Okay, so people from within the firm or outside, the client can also tell that the quality of this audit team was not good. Okay, so this can happen. So the firm should have clearly defined channels to raise any concern. In case if such concern has to be raised, there should be written down policies on how you can raise such complaints. Okay, so if there is any investigation or quality check which is happening, the same has to be supervised by a person who is not involved in the engagement. If I am a team member of the Reliance audit, I myself should not be involved in the quality check process. Someone apart from me should be also involved in the quality check process, because there should be someone who is independent and is doing the review work properly. Okay. Yes. So the complaints, allegations, and responses, whatever were there, needs to be documented. And in case if there were any deficiencies, okay, then such proper action should be taken. So complaints can be raised by either within the firm or outside the firm, but whenever such complaints are raised, it should be taken seriously and such appropriate action should be taken on it. Okay, hope you understood. So yes guys, we have come towards the end of the video. Hope you understood the standard of SQC1 very very well. In case if there is any doubts, you can comment that down below and I'll try to answer it as soon as possible. And this summary notes, like I told you, it will either be available on my Telegram channel or on my description box of this YouTube video. You can get it from there. And finally, before you go, I'm going to bring up the entire series of SQC1. Let me know if you like this style of studying, is or if there is anything else I would have to add to my video to make the videos better for you, because quality for me in my video is also very very important. So I want the best for you all. So yes, you can let me know your feedback also in the comment section below. So yes guys, that's it for today. Thank you so much for joining into this session. Before you leave, please make sure to like, share, and also subscribe to the channel. And don't forget to hit the notification icon so you get notified every time I post a new video. Thank you.